Hello, all. Just getting everything ready here. Hey, Russell, how are you doing?
Hey, what's up?
Not much. Look at that. You got the same view as me, a ceiling fan of
Yes, I have a fan.
Ceiling fan of. Jeez, my kids are super loud. Okay. Okay. Let's see. I gotta give everybody a few minutes here. Can everyone hear me? I put in the microphone thing.
Yes, I can. And the demonic screaming in the background.
What?
Demonic screaming in the background.
Yeah, yeah. I'll tell you. Although I prefer it to him being inside and complaining. Just I wonder what he's doing right here. I don't know what he's doing. It looks like he's micromanaging other kids. So. Okay. We are recording, so that's good. I'll give everyone just a few more minutes here, considering I was late. I keep seeing all these people doing cool things with the backgrounds and virtual background. See the classic, right? Now you can see me there. Let's see. Really? I don't think I would want that. West Oahu, so much more. Space. Sure, I'll be in San Francisco, just like the classic. Everyone else's Zoom meeting has them in San Francisco, so why not? Okay. So let's do the housekeeping things first. Bloomberg is the never-ending story. So I know some of you, I saw Michael, I saw that you had requested terminal access. Jasmine, I know. If you haven't done it yet, get through that first process to get to the point where you're waiting on me to enable your terminal access. So it's a long story of usually at a big school, they've got like a team of people that are doing it all. And unfortunately, at West Oahu being West Oahu, it's only me doing it. So we had to install 2 new terminals today. Once those are installed today, I think we're all done at that point. At least they assure me that everything is all done. I was hopeful last week it was all done, but they tell me this week it'll be all done. So this week we should have the access, and I'll email everyone again the class code. But the class code for us is, sorry, let me go to share content screen. So the class code is here. Focus on this here. Oh, the class code is this code that's right here. That's at VPYNZFJRDK. So if you want to write it down right now, you can, and that would help you do it. Otherwise, I just got this from Lalima. It's right after the video. Again, it's VPY NZFJRDK. And so we should be ready this week. I'm working on it. Although it may seem like I am the slowest person in the world. You actually this is actually not that someone doesn't have favorites, but this is my favorite class. Okay. The other thing would be going back to modules here. Module 1, Chapter 1, everything is posted. So that would mean that the video I created is posted, as well as the PDF of the chapter and the slides. And the same for Chapter 2. My task is working on it for 3, 4, 5, 6, which seems like a lot, but it's really not, because most of it is econ, so it should be rather quick for me to plow through that. But really, you know, when this class lecture ends on a Tuesday, if you're doing nothing until the next Tuesday, you probably don't want to be doing that, because you should be kind of, you know, as time permits, be logging into the CFA Institute, going through the site and logging in and working through the learning ecosystem. I've already covered it before, so I'm not going to do it again. But if you are at all sitting here in this class right now and you're saying, shit, I didn't watch him doing it and now I'm too afraid to ask, you should totally ask, and it's not going to bother me. Just send me an email, say, Shedding, can you meet really fast on Zoom? Totally willing to walk you through how to do it. I'll even record it so you can watch it again later. We're still in September. We're still early enough that you can say, I totally was checked out of this course up until this point, and everything's all good, because you would still have enough time to work through everything. For the CFA Institute, which again, when we talk about what this class does, certification and analysis, again, we're working through 2 certifications. One's the Bloomberg, which is easy. And honestly, again, this week is going to be the week where everything is up and running. And then there's the CFA Institute certification, which is, in my opinion, a bit more important. You need the passcode. Yes, can someone confirm I haven't lost the whole class? Yes, perfect.
Jiding, I have a question.
Yeah.
What you just were explaining, what is that? Like the code. Where does that code go?
Oh, the BMC code.
Yeah.
Yeah. So when you are going into, let's see if we can do this. Portal. Bloomberg for education. So the thing you would do, when you're starting this process, you go to portal.bloombergforeducation.com. That's where you start. So portal.bloombergforeducation.com. You can do this even on your phone. This part, there's nothing you need to worry about here. Then you would sign up as a learner right here. And you would type in first name, last name.
Your screen isn't sharing, I don't think. Not on mine.
It should be. Does anyone not see it? What do you people have to tell me what you see?
I just see black.
It's not
Okay,
sharing.
black.
Okay, let's see here.
Oh, it's back. It's back now.
Okay.
So sign up as a learner, right?
Yes. Yes. Okay, so if I go to this, do you guys see that? What do you see now, everybody?
It's back to black.
Back to black. Okay, someone should sing it for us. Let's see here. Enable. Let's see here. Okay, I'm just probably doing this wrong. I shouldn't be screwing around with this. Okay, let's do this.
Oh, under class code, is that where it goes?
Yeah, exactly. Yep.
Got it.
Okay, I don't know why it's not letting me show this. What the hell? Lets me do that. Lets me do that. This is going to be a really short class. It doesn't let me share content, but it won't. Let's see. Okay. I'm not sure why it's doing this. I'm going to have to, everyone stay in the meeting. I'm going to get out of the meeting, okay? Or wait, I don't know what it does to all y'all. If it ends up kicking you all out of the meeting, just log right back in again. Sorry, for some reason I shouldn't have taken Freese's call because things are, well, that's okay because I can't admit him anyway, so. Okay. Okay. Okay, I am back. Is everyone still there? Yes?
Yeah.
Perfect. Okay. I am a host. I am the host. Who's the host now? That's me. Kidding me, Freeze. You're killing me here, dude. Okay. Sorry. I'm gonna have to end it. I'm gonna end. Oh, wait, I left. That's great. Perfect. Excellent. Okay. Dude, now we're rocking and rolling. broadcast. Screen. Start broadcast. What do you all see? Screen or black?
Your screen.
Yeah.
Perfect, excellent. Perfect, excellent. Okay, yep. So, yeah. So the long answer to that question was, yeah, you put in the code here at this point, or actually after you've created the login, and then at that point,
So it
log
gives you
out
two
and log in
options.
again. So at that, for which two options? What
So
are you saying, learner?
Yeah, so I signed up and it says 1-year license to Bloomberg professional rate or student rate. And then, but it doesn't allow me to click the student rate.
Did you
I'm
use your
it should be.
email?
Did you use your, yeah, did you use your UH one?
My what?
Your UH email?
You have to use your UH
No.
email.
Damn, I didn't.
Yep. So it's recognizing, I've already put you all in as allowing your UH emails, because that's obviously the one I know. So if yours is like Surfer Dude 54, I wouldn't have, at yahoo.com, I wouldn't have known that. So, because once you've done it successfully, you should have a screen that kind of, well, it'll look a little bit less because mine's a professor mode, but yours will look somewhat like this. Then again, once we get it going this week, this will seem a little bit more, sorry, I'm really getting, there we go. I think we're good. You all see my
Yeah.
Bloomberg for Education. Okay. At that point, you would then click on, after you've created this Bloomberg Market Concepts login, that's how you're going to be accessing, for all of you, that's how you're going to be accessing the terminal. I unfortunately have to go through a step where I have to grant you access to use the terminals. So you're going to click on terminals up there. And again, ours shows up as Research Corporation of University of Hawaii. Don't worry about what it shows up as. It's not a big deal what it shows up as. But as you can see here, for those of you who are doing it right now, I am enabling things, which is the easy step. The step I'm working on now, which is the one problem we're having here, is, as you'll see here, it says only one shared terminal, which is the problem because we have more than that. So no one can log in because the one shared terminal is my terminal, and it's not letting anyone share my terminal. So what that means is I have to get our whole pool of terminals, and to do that I need these 2 more installations to occur, which apparently is happening, should have been happening today. If not, it's happening tomorrow morning, and we should be all good. What that means for you is that then you've got 2 things you can be doing here. The one thing you can be doing is that once you have the terminal access, you're going to be using the terminal just like you would, playing around with it, doing projects, doing whatever you want. But the other thing that you would want to be doing is this 8-hour class of the options here of like, how does Bloomberg help you do these certain tasks, which are useful to know. And not that I'm the big brother here, right? But this is how I would know who's all in there, who's doing their job or not. And obviously, you can start, I think,
How do we start this? How do we start?
I don't think it's going to let you start it until I get this thing done.
Okay.
So
I just
Um,
got in. I just signed up.
Okay, let me go back. I'll even enable it now. So again, I'm doing the one step of enabling this, which unfortunately still doesn't finish off the task because we need these two other installations to occur. Well, look at that, Cody. Why does yours look like that? Why is yours got a little check?
After you gave me access, there was a separate set of questions. It asked for
Yeah.
it asked for a phone number, and it sent the confirmation code to my school
Oh, yeah,
email.
yeah.
And I literally just finished that, so maybe that's why it looks like that.
Well, maybe. So Jazz, and yours, I know you did it that way, but yours doesn't show up like that.
Oh yeah, that is weird. I don't know why.
Oh,
Huh.
okay. So Shining, so on that main page, we do each of those options: economic indicators, currency.
Yeah. So for this class, if you're in this class, 398, I actually enabled all of them because I think that in this certification class, you should go through all of them. All you
Okay.
need to do, though, to get the official Bloomberg certification is just go through the ones with the blue ribbon. Then you notice there's all these extras that I'm having you go through, but I just think they're useful. If you're doing a certification in analysis class, I think these would be useful things to be able to go through, such as things like equity options. So like the call options, put options, how do you manage a portfolio using Bloomberg? How do you trade in commodities using Bloomberg? Those are all great things that probably many of you in this class are actually curious about already anyway. And the nice thing, again, is that we've got access all the way through the end of summer, next summer. And I'm not going to turn off your access when this class is done. So this is all stuff you can use all year. So the more you use it, quite frankly, the better. And that's true even if you graduate, like Levi, I know you are, Russell, I know you are. I'm not going to turn off your access just because you're graduating. As long as you have your UH email address going, I don't think anything is going to change.
Okay. Cool.
So until end of July. Okay, so that's going to be done, and then again, just in case anyone is. Again, the other one would be the CFA Institute, which again, hopefully you've all gone through that process. I'm not going to go through it again here, but if you have any uncertainty about how to do this, what to do here, send me an email and I'll do a private Zoom session with you all. Okay, let me go to, I'll share these slides here, but basically, I want to just continue the theme of what I was talking about last week, which was a continuation of the week before that, which was why are we seeing the things happening that are happening? The thing that surprised me, and again, this is going to be especially noticeable for those of you who had me for international finance in the spring, would be how quick the decline occurred, right? Because I mean, when we were all meeting in the early March period, still for international finance, I mean, I was talking about how, yeah, things are really weirdly priced and things are overly highly priced, but we just saw this precipitous decline that really occurred from February 12th was the peak date. And then from February to March, in 6-week time period, the markets fell over 30%, meaning, well, when they reached down 20%, it was a bear market. And as you can see here with other notable bear markets, it was the fastest point at which we ever had reached a bear market. But I don't care that much about that because what I really want to understand is this part. Why has the increase been so quick? Why in 5 months has the market essentially entirely recovered? Whereas in other recoveries,
I wish this
You're-
chart included the '08 crash. This chart
Yeah.
is amazing. I really like this chart. I just wish it had that one too, because I think that one was compared to the blue lines in this chart was the
Yeah.
fastest other than this one. I think this one was the fastest, right? Ever?
Exactly. This one was the fastest decline. '08 would have been, see, that's the thing. For '08, it's still, even though we think of the fall as really being the, 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 um, the fall there still occurred over
It was longer, right?
over at least
Yeah.
over 100 trading days. Yeah. So it wouldn't have been, '08 wouldn't have been too different. And really
This
what the chart, and I didn't make this chart, so really what this chart was focusing on was the fastest recoveries. And these are the 4 fastest recoveries. So that's
Oh.
why this doesn't include '08. Because here
Got
we're
it.
looking at recovery in 126 trading days, 310, 434, 485.
Oh, got it.
Because what's important here is that the normal a recovery time is 1,500 sessions.
Right.
So that would be about 5 to 6 years
That's
for
amazing.
the recovery. And so we recovered here in 4 months or 5 months, about 5 months.
So was this one of the biggest heists ever?
Well, that's what we're looking at today. Exactly. It's exactly that. So how do we fall 35% in 6 weeks and then recover it all in 126 days? Do we think that so this is, as I kind of note here, this is the fastest it's ever occurred that we have in our history of the market. So the thing that concerns me is this last point. We don't have anything to compare this to. So that's the thing we need to understand here is, why is this different? Now, it is different. I mean, it's hard to say it's not different. Obviously, with a pandemic, right? You've got a disease that causes the decline, right? And you discover it, right? All of a sudden you realize, shit, there's a COVID going around, right? So the market falls dramatically very quickly. And then the hope is, right, you have a mask as an interim solution, and then you get a vaccine. So that what you see is like a V shape, like what they keep talking about in the news of the V-shaped recovery, right? You get the decline because everyone's like, shit, we got to do things different, and then you do the mask/vaccine solution, which gives you all the recovery. But right then we can talk about different letters, right? Because then some people say, well, maybe it's like a long U, right? Because we get the decline, and then we kind of puddle around in the bottom, and then we recover,
W.
right? Or a W or an L, right? We can talk about all the different ways the market could exist. But we really have a difference here, and this is the thing that has been bothering me this past week, which would be the extent of the divergence between the market and the economy. Right. And I think that people are forgetting that when we're talking about this, right? And partly it's because right, I mean, and again, I really don't care about the politics of this, right? But if the politicians are saying, like, right, how do you take a person who's taken, who's like 50 years old, took basic econ when they were in college and never took another econ class again? They probably barely remember terms like GDP and things like that, but they understand, right, when they turn on the news, someone saying the S&P 500 index. So they equate S&P 500 index with kind of this gauge of how is the economy doing, right? And so they look at that and they say, times must be great. At this point, right, if we go back to here, the economy is totally recovered, right? But we obviously know that if you take the deeper analysis of GDP and unemployment, we know that it hasn't, So how do we, that divergence between the market and the economy, I want to focus today a bit more on, again, that divergence of the market. Why has the market increased so quickly? Why has the market increased so quickly, yet the economy hasn't? And there's at least 5 reasons why. And that's what I want to focus on here first. And again, all these slides will be available. I'll post them as well as this lecture. But this first thing here is just the massive, massive, massive stimulus that occurred in March. That went far and beyond what happened in '08. When we think of '08, '08 was seen as notable and was difficult because it was $785 billion, which seems like nothing today, because if my memory serves me right, I think it ended up totaling $2 trillion in stimulus. And that would be fiscal stimulus, not the Federal Reserve doing what it does, because the Federal Reserve is basically a blank check. There is no limit to what the Federal Reserve can do. So even on a scale, this is large. And it's notable that actually what changed in this intervening 12 years between this is there has been a shift in macroeconomic theory. There's been a shift in how politicians approach this. For some of you who've had me for other courses, you can attribute this to the rise of modern monetary theory. In macroeconomics, modern monetary theory basically says that we can dramatically increase the balance sheet of the government. Basically, the government can have unlimited debt as long as it manages inflation. And as long as it manages inflation properly, it can print as much cash as it wants to. Debts don't matter. Back in '08, you had enough what they call deficit hawks, which would basically mean politicians who say we shouldn't spend more than we're taking in. There were enough of those people in '08 that obviously the first time around, when they tried to do the stimulus package, it failed. And the second time around, they finally got $785 billion. But that was inadequate. Because one thing you've noticed from '08 that was different for the market is that the market started the decline in '08, and it really didn't fully recover until years later.
I just
Right.
looked it
And you
up,
don't-
Scheiding.
Yeah.
It took about 4 years.
Yeah, it took about 4 years, 5 years. Yeah, so I was going to say 2013. So yeah, 2014, 2015. You don't see that increase. And the reason why it took so long, some would argue, and no one really knows, I certainly don't know, because we're still kind of analyzing how things went, is that the general sentiment is that this was inadequate. And so the thing that we've learned is we need to do much more. And so that's what we're trying to do here. And that's what you see here, right? You see in terms of monetary policy, the Federal Reserve cuts interest rates to near zero. We've got these massive stimulus payments, right? $1,200 per person, right? Right. We've got the COVID-19 relief money, right? And the effect that then has on the market, right, is that the age-old adage for any investor is no one should fight the Fed. If the Fed says they're going to do something in terms of the market, there is absolute, right, because they have an unlimited balance sheet. You cannot fight the Fed. So what ends up happening is that investors chase the market down like they did in that first 6 weeks. And then in the 5 months afterwards that bring us up to today, we're now kind of chasing the market up. So if you're new, if you have all this money and someone were to come out right now and say, I've got this money, what do I do with it? One of the things that seems to keep recurring here is that there really is no place to put your money other than the stock market. It's really, and as more of a bond investor myself, it's really difficult to even make money in the bond markets right now without worrying about the risk return trade-off. It's really, really difficult to get the returns in even the bond market, which means it's forcing everyone to go into the markets, the equity markets, even if you don't like the price. And so that's the picture for this slide here, right? Is that the yields are terrible in the bond market as opposed to the equity markets. So equity market, S&P 500 dividend yield, that would mean being a dividend investor, right? That would be like investing in something like AT&T. That'd be like investing in the utility, Commonwealth Edison. That would be the Robinhood favorite, right? Ford, which has a dividend yield of like 7%, right? You'd go for dividend leaders and you'd collect that dividend, and that's certainly going to exceed what you can get on the 10-year treasuries. And we see that here. That's not going to beat inflation. So that is a negative real rate. You're basically paying money to lend money to the government. Although it should be noted, and this is why dividend investing is great if you're a widow and it's great if you're an orphan, but you're not even making much money even in investing in dividends on an after tax, after inflation basis. You're not even really making that much in dividends. Why does Ford pay such a high dividend? It's a risky balance sheet, right? I mean, the only reason why people are investing in Ford is because of that dividend. If Ford were to say, we need to preserve cash this fall because not enough people bought new cars, we need to preserve cash, so we're slashing the dividend, everyone will dramatically and unequivocally exit Ford as a stock. And now you, the investor, are going to be left holding that shit bag, right? So, you know, there's obviously risk to investing in dividends if you don't believe in the underlying value of the company. I don't know, I'm kind of curious here. I'm sure it's over 7% still.
So a question regarding the
Sure.
stimuluses. The first one in '08 was about half the size of the one today. And
Yeah, less than that, yeah.
It took about 4 years to properly recover, whereas 2 trillion took us less than a year to recover. So what?
Less than half a year.
Yeah, what happened with was there a difference in distribution?
There's definitely a difference in the distribution, which is actually why we actually get this other cool shape, which I didn't talk about. But, you know, from a social justice perspective, that's why some people are talking about instead what we might have is a K, where we had this big decline, and then for some people, right, they got really, really rich based off of the market fall, and then you've got people who can't pay their rent. So if anything, COVID-19 was really kind of an inequality. It fueled inequality even further than before, right? Where obviously those in the hospitality industry really, really, really got fucked over, whereas landlords could apply for certain loans and, right, the person renting just gets their $1,200 and that's all they get, right? There's some rent relief programs, but there's not very much out there for rent relief except for the fact that you can't get evicted. But if you're a property owner, right, and you're a small business, you can basically, right, keep your business going through this entire pandemic. If you're a hospital, right, the government's actually paying for all of the COVID-19 treatments. There's a number of ways in which those who are the owners of capital have been able to profit from this, not profit from it, but have been able to weather it much easier than a wage earner. As opposed to this stimulus here, which we can talk about, it went to big banks, but small businesses and regular people all got equally fucked, right? The only ones that were making this out of the 785 billion, most of that went to the big banks, right? Which we can still see as bothersome, but the big banks just got bigger and then no one else got anything better.
I mean,
Whereas in here, I mean, what we're seeing, generally speaking, is that businesses and rich people were saved, rescued, and little people just didn't get anything. They didn't get fucked over more. They just didn't get anything, and then COVID's fucking them over.
What's new?
And we also still don't know the long-term effects of the stimulus.
No, we don't. No, I mean the concern, right, would remain that we're seeing that the concern right now is you're not going to be able to control inflation, and that's from an economic standpoint. From a market standpoint, even just based on this first reason, from a market perspective, it can't be good to have $2 trillion more sitting in the market, because if everyone's got, right, if you ask most people what did they do with their $1,200, I'd say more so than certainly in 08, a greater deal of people took that $1,200 and put it in the market. Which, when they say put it in the market and you say, okay, did they put it in bonds or in equities? At least from this reason number one, we can see they probably put it in equities, not in bonds. Which leads us to number two. So one of the problems here that we're seeing here is because it's a single virus, as opposed to 08, where we were talking about a housing crisis and the financial system collapse, which is a much more serious institutional problem. Because we're talking here about a virus, which presumably you can find a cure to, you create the conditions for everyone saying, well, geez, we're going to go to bed one night and we're going to live in a world, we're going to go to sleep in a world where there's COVID. And we're going to wake up some morning where there's going to be a cure for it, right? And if that's the case, and everyone's expecting and everyone's believing, yeah, at some point everything's going to be okay. That's why when you look at these manufacturers' indexes for manufacturing, meaning those who, this is purchasing managers. So this would be anyone who's buying the stuff for a company that's building stuff. Everyone that is building stuff, right? Let's say that you make stuffed animals, right, for little kids. You're a factory that makes stuffed animals for little kids. You're like, yeah, I know COVID exists right now, but I bet you 5 months from now, we're going to have the cure and everyone's going to start buying stuffed bears. Let's just start making them now. It'd be great because we can't make them. We don't want to start making them when we have the cure. We want to be able to have them on the store shelves by that point. So we need to start making them now. And that's what's happening right now. That's fueling some of the employment growth, is that the big major countries in the world, Germany, US, and China, Germany being the strongest European country, United States, and China, all are now producing as if COVID does not exist anymore. Now, that's not bad, right? It's good to be an optimist. And you see that because you've got more hiring. You can see that in the employment numbers. And people are also starting to believe the hype, right? That someday that we're going to wake up in next month or November or December and that things are going to be okay. And because of that, because everyone's got that optimism, it's then feeding into earnings. It's feeding into earnings growth. Everyone's now expecting, okay, if the economy is doing well, people are going to buy a new car, right? If the economy is doing well, I'm going to, I don't know, I'm going to go to McDonald's more, right? If things are doing well, I'm going to, I don't know, buy a new tractor supply company. Right, so you get all these arguments. I don't know what people do when they get rich. And I'm a Midwesterner, so Midwesterners' idea of wealth is they put money in a new tractor. Or it could even be, something simple as the fact that you could say, if people have more money, they're going to use their credit card more, Visa, right? If they've got more money, they're going to buy new shoes, Nike. If people have, even simple things, if people have more money, they're going to buy more Cheerios, General Mills. So you can see all these arguments for, and I don't know what the earnings are, the earnings expectations are for any of these companies I just listed, but without even looking at what they are, I probably can pretty well guarantee you that they've all announced earnings that, at least earnings expectations that are higher 6 months going forward as they were 2 months backwards. Meaning that 2 months ago, people were not as optimistic about future earnings as they are today. And so you're seeing this melt up. Expectations keep going up because everyone's thinking we're going to have a cure right away. And again, probably none of us, and certainly not even myself, I'm not smart enough about, I got through high school and college science, but I don't remember much. I like dissecting things. I just don't remember very much, quite honestly. I don't remember much about, I don't even know how a vaccine works, to be honest. I just know it does. So, but I don't need to know, right? I just know that I've never had the mumps. I know that I am jealous of most of you because I got chicken pox and most of you did not, because there was not a vaccine when I got it, and there was one by the time that you were born. So I can be jealous of all of you. Or like our grandparents can be jealous of us because we got polio shots and they didn't have that. So I know a vaccine works. I just don't know how it works. But that's a problem if I'm an investor, because the investor, I just see, oh, there's a solution to this problem. And all of a sudden, earnings will go back to what they were in January, what we were expecting was going to happen. And I'm just, if I want to be skeptical about this, I'm just not sure that's the case. I'm just not sure that, one, that the vaccine could emerge as quickly as people are saying, right? Just trying to throw out there, it might not be that quick of a solution. Or the other issue is going to be is that maybe it's not going to last for that long, right? Or, I don't know, maybe we'll get something called COVID-20. I don't know. I'm not trying to be a negative person here, but I think that we should, just like, when we're now on the anniversary of 9/11, right? Just like 9/11 kind of changed our perspective on safety and security, right? Especially in airlines, and so that it's never the same again. I suspect to some extent, we're not going to be the same again with regards to at least viruses, right? That the I don't know, some people would call it the uniqueness of Hawaii, right? Because even before the virus, right? Like, I still remember, right? Like, I know Michael, I've seen Michael, right? I remember from class when you wore the mask back in the fall class, right? Because, right, you were feeling sick and you didn't want to get others sick. I mean, I still remember that, right? Because they're in Hawaii, that practice of wearing a mask if you're sick actually exists though, right? And we know that it's obviously pretty strong as well in East Asia, but it was never a habit on the mainland, right? If you're sick, you just keep going to work and get others sick. But maybe that's not going to not be any longer the case. I don't know. I'm just, as one option out there. But I think the bigger thing, as we look at this, the bigger thing I realize is why the market is not the same as the economy, is that the market index doesn't reflect the entire economy. So that's my last bullet point here. It used to be the case that the biggest companies in the S&P 500 were the companies that were representative of the overall economy. I don't know. I haven't done this search here, but let's just do this search here. I don't know if this is going to tell us. Okay, let's just do this one here. Oh, not what was it? What was in it? So I'm just trying to. So the S&P 500. When we say that, that stands for Standard & Poor's 500. So it's the 500 biggest companies. But it used to be the case that the companies with the biggest market capitalization were representative of the overall economy. Now let's just look at it this way. So if we look at who is in it today, right? If we look at the 500 biggest companies today, what I'm trying to argue to you is that the companies with the biggest market capitalization are not necessarily your American Airlines. It's not your American Electric Power. It's not even your American Express. Really, what's driving a great deal of this is something like Adobe, is something like certainly not A.O. Smith, a kind of classic manufacturing company. You're not going to see that. Instead, or AMD, basically making corn and flour and wheat and things like that, or even an insurance company, Gallagher and Company. You're not seeing those. You're seeing the Adobe. You're seeing
Even Zoom.
Zoom's
been booming.
Zoom is, but I don't think Zoom would be in the 500 yet. Maybe.
Oh no, sorry,
No.
I didn't know.
No, but I mean, even if I just kind of, even if there's my Tractor Supply Company, huh? See, you guys made fun of my Midwesternness, but it was still good. No, but I mean, you're really seeing this as being driven in terms of market cap by like a VeriSign, which is, don't get me wrong, is a big company, an important company, but a lot of this is being driven by the tech industry, and that's what you're seeing. And that's what you're seeing here. Is that the index itself is looking at the biggest companies and how much they're increasing. So if you look at how much the S&P changed today, right? So if we look at what it did, how it performed today, and I actually don't know how it performed today because, okay, so it went up 0.5% today. What does that mean? Well, it's a weighted index. Weighted in the sense that Apple is the most valuable company there. So if we look at Apple and how it did today, is that Apple was up 0.16%, right? And there are other big companies like, well, not Tesla, because Tesla, as we talked about last week, is not part of the S&P 500. But if we look at the big companies here, Apple, Amazon, Google, Microsoft, Facebook, those have all done very well this year. Apple, 57%, Amazon, 68%, Microsoft, 30%, Facebook, 30%. They're all doing amazingly well, which is driving the market up. So much so that if on our weighted index, the market technically at this point is up for the year, up 4.8% for this year, which is just amazing when you
That's
think
insane.
about. Yeah, exactly. It is insane because the economy is definitely smaller than it was as compared to February. We are definitely still in a recession. Yet the S&P 500 is positive for the year. And even on an equal weight index, it's not that much worse. On an equal, right? So if we just said there are 500 companies, right? And we just said they each get one vote, they each have one weight, basically. The market with equal weight is down, but not very much. It's down about 4.5%, which is still not very much when you consider the depths, right, of not only Hawaii, but again, even in the mainland and worldwide. The supply chain is like shot to hell, right? I mean, you can't, right? I mean, yes, we can see it with things like PPE that's difficult to source those things, but we're talking about like very simple things are difficult to get because there's no capacity on airplanes to transport goods from one location to another. There's not a, I mean, just to highlight how screwed up the supply chain is. So Matson, obviously a very important Hawaii-based company, has obviously Jones Act compliant ships. And you know what the biggest, so they actually rerouted all of their ship routes. And they're making now the most money by taking lines directly to China with their ships and using that shipping capacity to get a lot of revenue. They never used to do those long haul routes in that kind of way. Matson focused on from here, Hawaii, to the mainland, and not really going a lot to China. And now they're making the bulk of their money with a China to mainland direct route, right? Which they used to get crushed in that space by the other shipping companies, but they need that shipping capacity so much so that even Matson can make money, right? So the supply chain is shot to hell. I mean, just economies are still, for the most part, either shut down or in dramatically reduced capacity, yet the market's up. Why? Again, we can do, part of it is everyone's expecting it to do better. Where else are they going to go? But see, the problem is, just going back to this, again, you can imagine let's just take these three reasons here. And let's just look at, let's just take one of you in this class, or let's say even like your younger sibling who knows nothing about the market. Even if we just look at these three things, you can see why your younger sibling might be convinced to go into the market, right? They've got $1,200 in their hands, right? And they see this idea of where else am I going to put it, right? Am I going to put it in my savings account that pays like a fraction of a single percent? No, I'm going to put it in, right? I saw this TikTok video. I'm going to put it in Facebook. I'm going to put it in Tesla. I've got this $1,200. That's where I'm going to put it. everyone knows once we get the vaccine that things are going to be better. So why don't I just beat the rush? And I'm going to chase the market up. And if I look at how the S&P 500 is doing every day, I'm going to see that it's now higher than it was back in the beginning of the year. This is the best time to get into the market, your younger sibling would be saying. Which then gets to my discussion from last week. Look at, again, this from a slightly wider perspective, Tesla, and look at the call options. Call options would be people making bets that, in this case, that, as opposed to the put options, the call option saying Tesla's going to keep rising. I mean, look at that increase in the call options in terms of volume. So we're talking here of volume. We're not saying share price. We're talking about volume of call options. That's what I'm focusing on. I'm not focusing on the share price. Look at that. And I remember in international finance talking about how this was bad then. It's obviously much, much worse now. 4,000% increase in call options, meaning people again betting that Tesla's going to keep rising.
Those people made a lot of money this week so far.
Exactly, right? The only ones that are losing money are the. It's not me. I'm not invested in this way, but I'm going to say it's going to be the people like me, who think they're smarter than the market and are saying the market can't keep possibly going up, and then they put their money where their mouth is and they buy a put option instead of a call option, right? And if they buy a put option, betting that the market's going to go down, you just lose your shirt, right? You just lose your money on that bet. And it doesn't make any sense, and you get frustrated by it. And again, this isn't me personally, but right, you could just see someone who thinks they know a little bit more about the market because they watched one more YouTube video that says Tesla's not going to do well. And then they say, you're right, all these call options, that looks so bad, I'm going to buy a put option instead. And you still lose your money.
And you need
Because
about $2,000 just to buy a call option in Tesla. You need about $2,000.
Yeah, and you're more likely than not, you're still going to make money on it. That's the thing, right? And it doesn't make any sense because the put option would be where I would say the numbers demonstrate that there's more money in the reality to be made in the put options rather than the call options. Yet the call options is where the money is. And that's what you see right here. So look at this. So going back to some of my themes from last week, the market, 1/5 of the market is now individual investors. And again, I'm not trying to be an elitist here. I'm really not when I say this, but this is like the country bumpkins getting involved in the market, right? And I'm not saying I'm not but I'm not saying like I'm not trying to be elitist about this, right? But it gets me concerned when someone says they've watched 2 YouTube videos and now they think they're a market expert, right? Or again, and I've said this other weeks, but the guy is still there. The crazy guy in the Manoa Marketplace parking lot at 11 p.m. who I can hear talking outside of his like hoopty car, talking about all the trades he's doing, right? And I see that guy every day talking on the phone. I don't know who he's talking to. He's talking to someone on the phone about the trades he's doing. And I'm obviously listening in, seeing what he's doing. And the one he keeps talking about, which is what I tried to focus on here, is DraftKings. Dude, DraftKings would be...
it's so funny. It's like betting on betting.
Exactly. Betting on betting. Exactly. Tesla. Again, people are making crazy money on these companies.
Both are up huge today, too.
But also think about this. They didn't exist 20 years ago. 20 years ago, they didn't exist. Whereas, you know, I can't make money on Pfizer. I can't make money on Johnson and Johnson. I can't make money on, you know, Medtronic. I can't make money on, you know, anything in the healthcare space, let alone I can't make money on American Express. I can't make money on Visa. You know, I'm making money, but I can make so much more on this. Because you can't make money in call options and put options in these spaces as much as you can in this. This idea of buying and holding is your grandfather's trade, or in this case, that's my kind of trade. And I may look like the tortoise here, right? And someone on TikTok is probably making a video talking about me being an old grandfather in the space. But if I don't even know what TikTok, I mean, I know what it is, but I've never been on it. Reddit I use and I find it useful. Facebook I use and I find it useful. What is TikTok? What it's the video? Is it that the length of the video is limited in size? How long can a TikTok video be?
So I think max is like a minute, but I don't think that's the reason it's so popular. I think it's like the algorithm they use for like deciding what you want to watch next is better than a lot of other social media networks.
Okay, so it's not TikTok's value isn't its degree of integration in social media. It's the algorithm it uses to make the future suggestion. Is that right?
Yeah.
Okay. Right, because I mean, for Facebook, sometimes it makes good friend suggestions. Most of the time it doesn't. It's just like Netflix, right? Netflix, sometimes it's got a good algorithm for suggesting what else you should see. But most of the time, but it can get really screwed up too. I know some of you have heard my story of me watching that documentary about beavers and how Netflix really screwed that one up. I mean, it's just, you know, like, you know, you only have to watch one murder mystery until you start seeing, you know, things about like the BTK killer, right? And you're just like, I just wanted to watch one murder mystery, and all of a sudden it makes me look like this like weirdo. Yeah, algorithms, I mean, are obviously driving a lot of this. But to the extent then that, right, with TikTok, it can feed on itself, right? So if I make a TikTok video where I say, do this trade, and then the next video that follows it reinforces that opinion, I, as the investor, can then say, like, dude, everyone's getting into that space. Plus, as some of you would know from when you had me for the spring class, it's just so easy now to open up a brokerage account. You could open up a brokerage account in less than 10 minutes. It doesn't take much to open an account. You can open it up that quickly. And so you don't, you know, there's no, you don't have to pass a test to be allowed, you know, into the market. You can just start doing it. And so that obviously makes it easier, and everyone's now, even with $100, can get into this space. You don't even need $100. You can buy fractional shares, even with Schwab, that you can, you know, or even with you can buy fractional shares even in Robinhood. So you don't need to do very much here. Let me just do chasing momentum, and then I'll do chasing momentum, and then I will we'll take a break at that point. And so this is, I mean, when I see what's happening now is that everyone is just chasing high growth companies. When you look at something like Boeing, no one wants to get into that space, right? And so the shares are trading at like 175. Yet we still know airlines might not be buying new planes, but they still have to get planes maintained, right? And eventually at some point, even if you're storing a plane, it's going to have to get replaced. And there's no other company besides Airbus that makes planes. So why Boeing would trade at 175 a share is beyond me. Or I'm just looking at my phone at the same time here for companies where something doesn't make sense. Why the share price is what it is. Well, even something like so I'm just looking at this really quickly here. Well, in full disclosure, I own shares of Boeing, but I also own shares of Bristol Myers Squibb, which isn't pharmaceutical. I mean, it's trading at about $60 a share. Yeah, Bristol Myers makes money. It's got a $134 billion market cap. It's, at least on an after-tax and after-deductions basis, it's actually making money. You get a 3% dividend, yet, it trades in a pretty narrow range. It certainly hasn't had a blockbuster year. Boeing obviously down from its peak of about 400 something. And I'm not saying you got to get into cigarettes, but even a cigarette company like Altria, MO, trading at about $43 a share, makes money. It's got an 8% dividend, yet no one wants to own it. And that's because, people get into smoking, but it's not that big of a growth, right? Airplanes, the growth is going to be there. It's just not as fast. Bristol Myers Squibb, the growth is there, just not as fast as Tesla, as Apple, as Amazon, as Microsoft. Oh God, I can't tell you how many professors have approached me and said, I bought shares of Shopify. Dude, I don't understand it. I don't understand it.
Shares of what? Daddy?
Shopify.
I'm sorry? Shopify.
Shopify.
Yeah, Shopify, as I understand it,
$900. I just looked it up.
Yeah, my basic understanding of the company, and someone can correct me if I'm wrong. The basic understanding of the company is that it provides the framework and infrastructure for a company that is doing online shopping, online distribution, online retail, basically. Is my understanding of the company different than what it is?
No, that sounds right.
Yeah. I mean, so basically it's kind of like I want to open up an online store. Shopify is going to give me the infrastructure I need to open up my online store. $900 a share.
That's insane. That's insane.
Yeah, I don't, again, when I say I don't understand it, I'm not saying the market is bound to reflect my reality of the world. I would obviously like to think it would at some point, but I don't make an investment newsletter, but if you were in my investment newsletter, I wouldn't have said buy ticker symbol shop. And you would have been like, dude, shedding. I lost out on the fact that in February, when this one professor told me she had bought it at 400 a share, and now she looks like the genius, even though I don't think she is.
There was actually a student in one of your classes last semester that said his uncle
that's
bought
true.
it or something.
Who was that?
I don't know.
Remember?
Not sure.
Forgot his name.
I do remember that.
And he bought it like around like whenever that class was, so he bought it cheap compared to now.
Was it that seed guy? Remember that guy who worked on the
No, it
farms and
wasn't
seeds?
him. It wasn't him.
I mean, I see potential in Shopify, especially back in February. So I don't see why it wouldn't have gone up. But like Boeing, I could see why it's stuck at the price that it is.
Okay, well, how about, Cody, let me grant you this. the argument for why there would be an increase from February to today, I think is there. It's absolutely there. There is more online retail going on. Yeah. Do we think that it has tripled? Right? Because if we look at the share price, and certainly if we look at the earnings basis, the company is losing money. There's no dividend. The market cap for a company that didn't exist, I don't even think 10 years ago, the market cap is $112 billion for a company that
I mean, yeah, I don't know much about them as a company. I just know the basics of what they do. But no, yeah, I get why they're. I mean, Amazon is definitely any small business that goes online and uses Shopify. Shopify will make a percentage, but they still have to compete with Amazon, probably supplying the same product. So why would a consumer go to that individual company's website to purchase something, whereas they could go to Amazon to purchase something? And I don't know if that has.
So help me understand it. And this is just me trying to understand the Shopify business. So is Shopify like Etsy or eBay, where it is the storefront, or is it just providing the back door kind of like materials that you then make your own site? Because I was under the impression Shopify gives you the tools to make your own site, or is it something like eBay?
I think Shopify is more like a tool you add to your existing website to monetize products on your website.
Oh, but because I'm using their tool, they take the cut.
Yeah, they take a cut. I don't know what the cut is. But still, you have to go to the individual company's website. So it'd have to be a pretty specialty product, I would assume, for them to even purchase it through the website directly.
Okay, no, I understand the argument now. Because again, this would be similar to, right? So what have I been doing during the pandemic? As I told many of you, I've been selling a lot of stuff on eBay. Stupid stuff that like has been accumulating around my house. And dude, it just made I had this old iPhone 4S, which, iPhone 4S, I actually replaced my iPhone 4S only in 2018. So if it tells you anything about how simple of a person I am, I replaced my 4S phone in 2018. And yet I bought it in 2012 new, and I sold it on eBay 2 months ago for $30. And it doesn't make any sense to me why anyone would buy my old janky ass phone for $30 that at that point, I mean, it's outdated technology. But the only way so I'm telling the story because what makes eBay useful and it makes it easier for me to use is by accepting PayPal as payment, right? So PayPal as the payment method, PayPal takes, I think, a 2% cut. Every time I use that as the payment method, let alone using eBay, right, which takes 10%. So yes, I'm making money, but obviously everyone else is making money off of me as well. So I'm suspecting that's then the Shopify, right? Shopify is the equivalent of PayPal in this argument, not eBay.
Yeah, but I see the biggest benefactor from Shopify would be like small businesses. I mean, like small local businesses. And if you want to support local, you would actually go to that local website.
No, I understand. So like, let's say I'm good at like, I don't know, making something stupid out of like a rock I find on the beach, right?
Yeah.
And I'm not going to go on eBay to sell it. I'm just going to, Tom's Rocks, right? And I'm going to start this business called Tom's Rocks. And I'm just like, fuck, I don't know how to like collect payments or like make a website or do any of this stuff. I think the idea here, right, is I could get in contact with Shopify. They'd give me all the tools to make a website, create payment structure, buy the Google search words, do everything from top to bottom. And basically all I have to worry then are about rocks, and they kind of worry about everything else.
Mm-hmm.
Right?
Yeah.
So yeah, I mean, absolutely. I mean, I think the argument's more there that more people are going to be using Shopify. I just don't know even if you look at the professional analysts, which I just did, they rank it a buy. but it's not a strong buy as the rest of the market is giving it.
Mhm.
And what you're seeing here, that's making this market so much different this year as opposed to any other year, it's just the options trading. And options trading is so dangerous for any of you that have done it. I know, Russell, you have. I mean, I have. For those of you who do it, it's a quick way to make money, but it's a really fast way to lose money as well. And that's what you're seeing here. Everyone is doing a turbocharged trade. Everyone wants money as quickly as possible. And as I showed you last week, you really can bet big with an options trade. Just like SoftBank did, right? They put in $4 billion, but with that $4 billion using options trading, they were able to make a $50 billion bet. And the bet worked out for them. But the question is going to be is, does it keep working out for them? Okay, it's 6:23 right now. I'm going to stop the conversation now so that we can all take a break. I will resume the conversation in 12 minutes. I'm going to pause the recording, and I'm going to pause my video and everything else for 12 minutes. So if you're on right now, we will resume things here in 12 minutes. Okay. Haven't lost anybody, so that's a good sign. Okay. Let's see here. I see this always. Okay, so let's go back to my last slide, which I think is also still important here. You guys can see my slide? Yes? Yes?
Negative.
No? Yes? Oh,
No.
Okay, let's see here. Go back to this. Go to this. Now do you see it? No, yes. No?
Yep.
Perfect. So let's look at so let's say that you're convinced so far with everything I'm telling you. And you're like, you know what? The market's screwed up, but screw it. I just want to make money. I don't really care if it's proper, I should be making money. I just want to make money. And if only I had known, I would have bought Tesla back in February, or I would have bought Shopify back in February. There's just no way I would have known. And it sucks because now I'm too afraid to get into the markets because things are just very expensive. Because I do believe everything trading's telling me everything's very expensive. I just wish I could have gotten in when things were cheaper and then gotten out now when things had like quadrupled in price. Well, you're fortunate all in the sense that this year is an incredibly strong year in the IPO market, meaning the initial public offering. Does anyone know the name of the company that is having its IPO tomorrow?
Snowflake.
Yep, Snowflake. Snowflake, $30 billion. Pricing was today, begins trading tomorrow. It's going to be priced at about 120 bucks a share. Its revenue grew 174% since last year. Warren Buffett, with Berkshire Hathaway, just made a huge tech commitment for him, $250 million. so $250 million. What it does, I'm not entirely sure here, but from everything I read, it basically manages your cloud data. Company is growing a lot. It's not making money, but it's growing a lot. So what I'd end this lecture with by saying is, okay, so let's say that you end this lecture and you're sitting on $1,000 in cash. What should you do, right? Should you buy approximately 8 shares? Should you buy calls? Or should you buy puts? What would you buy? How are you going to make a lot of money in this? Let's put it this way. By 10 a.m. tomorrow, when the market closes, it's going to open, let's say at 120 a share. I bet, just betting here, I have no idea. I bet you it's going to close somewhere in the 150 to 160 range tomorrow. That would be my guess. Which, if I bought these shares, would net me about $240. Not bad for a $1,000 investment. 25% gain, right? 25% gain. Not bad. But I'm probably going to make much, much more on a call option. Meaning betting on the fact that the market, that this share price is going to go up more and more. Meaning if I did something like a $200 strike price, I don't know, 90 days from now, I bet you I could make a great deal of money on that. That in 90 days, that the share price would be at least $200. I could probably make a lot more money on that. Even just selling that option, I wouldn't even have to wait for the 90 days. I don't know, Russell, what do you think? I know, Russell, you're a big more of a commodities, gold, silver, Bitcoin kind of person.
I don't trade IPOs. I don't know much about the company. If I
Do you trade, but you've traded options, right? Or you haven't traded options ever?
every day, every single day. But I
So
only trade
what would you
options
say, as an options person, what would you say to this?
personally, I wouldn't trade this, but if I were, I would buy tomorrow. I would buy the 120 call and put. So
Yep.
if the price were to go up to 160, or if the price were to go down to 100, I make money. But
Right.
if it stays around 120, I lose money. So
Right.
I'm betting on a big move up or down. Now, I wouldn't do this because the thing about IPOs, there's no data. Like you can't
Well,
look
there's
at a
no
chart.
data, and also the volume is all fucked up because you don't know what the volume is going to be for this. But the one thing you know is that, and I say this again with not a lot of, I'm not trying to be like classist about this, but there's going to be a lot of country bumpkins in this stock tomorrow, people who have no experience and no sophistication about how to trade this, right? So someone's gonna, I'm sure if I went, I suspect I'd have to have a TikTok account, but I suspect there's got to be at least a few thousand TikTok videos about how to trade Snowflake. Right? I'm sure I'm not the first person to be having this conversation. And so, right, it doesn't take too many of those.
A friend of mine, how's this? This is funny. A friend of mine just tweeted to me about snow, and I had no idea what he was talking about. I'm like, huh?
Yeah.
And then your slide pops up. It was weird. It was like the exact moment. It was
yeah. So let's see here, Snowflake.
And this friend doesn't know much about the stock market, so it's it kind of tells you, You know, who
Really?
might be
There's
investing.
nothing. There's no videos with this hashtag yet. Really? Or is that because of the apple at the end of it? This is about snowflakes. That would be people who think that they're unique. Hmm.
Yeah, IPOs are tricky. No one knows where it's going to go. Until there's data, then I would bias a trade. But until then, I'll just wait a few weeks or months to see how the price plays out, and then maybe trade it if it's liquid. I don't even know if this stock's going to be liquid enough.
Yeah, what?
So look at that. Look at that. Motley Fool. Right? Could Snowflake be a millionaire maker stock? Snowflake.
What do they do as a company?
I think they're cloud.
My understanding is that they any big business, right? One of their big IT expenses nowadays is cloud, right? So they would use Amazon or Google or Microsoft for the cloud. And my understanding is that Snowflake manages both the both the data, both the data coming in as well as like maybe who you should go with as your vendor for it. That's my understanding. Let's see here.
No.
I don't understand anything else. We have to watch more about it. Oh, so here we go. Let's watch this Royce Jacob.
Hi, it's Sam Barker here from the Motley
Wait,
Fool.
here, can you?
Behind me is Landmark Mall.
You're not hearing my
Worldwide
audio, is that correct,
What once
everybody?
was a bustling and
Here you
booming
are.
shopping center.
I
just a
am,
stone's
Johnny.
Oh my, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Sunday Stock Watch. Series uploads every Sunday where I let you guys know what stocks I'm personally keeping an eye on going into the trading week. Definitely an eventful one ahead of us. So, as always, we'll go over each
I can
stock,
barely hear this
discussing,
guy
we'll
though.
dive into each one individually. In front of us, TradingView do have a few charts that I want to look over with you guys today. Obviously, having to do with some of the articles we're covering, but we will kick it off with S&P 500, good old S&P. We will touch on some of the equity indices.
I'm not gonna
Just
listen to
let you
this
guys know
guy.
what I'm
This
thinking
sounds. I mean, he looks like a pretty reputable guy, though, huh? Look at that. He looks like a pretty reputable guy. So let's see here, Russell. You and I should try to discern here what he's doing here. Looks like he's doing gold and silver, Bitcoin, SoftBank, Nvidia. Yeah, he's just charting it all out there. Yeah. Yeah, what's happening to this market? See, that's the thing. I mean, my only commentary on this all is I just don't like having to get in bed with people like that in this market. You know, like, I mean, that's the thing. Like, right? I mean, you don't want to have to.
Well, there's a lot of people, especially in 2020, that are new, that are getting into the market, this new generation. But what's the problem is somebody sells a call or buys a put and think they're a guru and can start teaching. And then they start publishing videos on YouTube of their
Like
trades.
that guy, yeah.
This guy. And there's a lot of those guys. So it's kind of like a blind, feeding the blind following the blind kind of thing going on.
Yeah, I mean, like, a lot of
dangerous.
this is like the article I sent to everyone last week, right? Which was we all have this option then, like we all have this idea that everyone's making crazy money on options, but the reality of the fact is that the reality is that people are also losing money as well. It's not just crazy money. There's money to be lost. So it's just one of those things of trying to understand, I guess, what's I'm trying to get out of this. There we go. Okay, so let me end this all with Sorry, one last thing. Share screen. Zoom. Maybe I'll finish it with this. So again, the Bloomberg issue will be figured out this week, probably in the next day or two. I'm confident of that. And the CFA Institute thing, all that you should be working through. Again, the first 3 chapters deal with the introduction and ethics and regulation. Not that difficult of stuff if you're anywhere near an ethical person. So you should be able to plow through that pretty quickly. It's the later chapters where things will get a little bit more difficult. And again, I make videos that give you kind of a Cliff Notes version. And, you know, given that this whole thing is going to require in total about 100 hours of studying time on your part, I can't make 100 hours of videos. So unfortunately, it's on you to kind of be reading through things. So even though I'm not talking about the CFA Institute chapters, it's my hope and fear that you are or that you aren't. You do need to get logged into it though soon if you haven't done it already. See, look at this. Trump saying to me, the coronavirus vaccine is going to be ready in 4 weeks. I'm like, shit, man. Why am I getting into stocks then? Because then everything's going to go up. But then, right, you see this, Fed to wait near zero rates through 2023, right? And if that doesn't spell inflation, I don't know what does. You know, I mean, the only... the last thing I'll kind of say here, the last thing I'll kind of say here before I end today's lecture, just because I'll end a little bit early because I've kept going over the past few days. And the slides are there for what I wanted to say, unless people want to say much more about specific companies. The last thing I'll say is that, you know, right now I'm like shopping for a home and, I went through the mortgage pre-approval process. Even the rates right now for me, a person who's got, I'm not a credit risk by any means, but even the rates for me, for the kind of money I'm asking to borrow, are just crazy. I don't know. I mean, I'm more responsible than I was certainly a decade ago or 2 decades ago, but still the kind of money I'm asking to borrow and the kind of rates that they think of me as a credit risk for, I think are just unreal. In other words, they're lending me a lot of money for a very low interest rate. And I just, right? I mean, I could misspeak right now and lose my job. I mean, then where's the credit risk in that, right? Well, I guess maybe Hawaii markets, things always sell, I guess. But that kind of thing, that's just me, right? And if rates are near zero, what I'm saying is that there's got to be a lot of other credit risks out there that don't make any sense, yet banks are out there willing to lend it. Meaning that 10 years from now, we're going to again be facing the consequences of a credit bubble. Everyone keeps saying 2023, 2024 is when everything starts coming together, but I just can't help but think that 2023, 2024 is when we have that next credit bubble that's bursting. Because if that's when things take off, that's when inflation takes off, and that's when things start to implode. Well, what do I know? I don't even know how to use. TikTok. So, okay. Does anyone else have anything to say? Otherwise, I'm going to stay on for a little bit. Priest asked me to walk him through the Bloomberg thing. So if you want to stay on a little bit longer, I'm going to pause the recording of the video. But if you want to stay on a little bit longer and watch me go through how to set up the Bloomberg thing, you can stay logged in. Otherwise, I'm going to stop the recording at this point. But just like I do always, I always log off last. So even if you're the kind of person that just says,